Hi lads, next video in the line of things. This is all about Fibonacci retracements. I'll try and take this as slow as I can. I know I tend to speak quickly, but this is quite an important tool I use. I find it very helpful in finding areas of potential future resistance. If you have like a nice big uptrend and it's say in the overbought, and you're thinking it's going to come back down, shorting, you want to look, or you want to say try and predict. You don't really like to use that word in Forex, but try and establish where the retracement is going to be down to, and if it's going to carry on up and bounce off that retracement or break on through. Now, as you know, I try and do these videos up to date, because if you look on the many videos you find on YouTube and other things like that, learning videos, pretty much all of them show you the perfect setups, the perfect Fibonacci lines, the things like that. And as you know, trading for a while now, it just ain't like that. It does happen, but it's very rare that you'll get the perfect bouncing off every Fibonacci line. And so I'll try and keep it as real to the current market as we can. This is back a couple of days now, and this is on a 15-minute chart, and it's the AUD USD. Now, what you do is you have to find a nice big uptrend. So say, for example, you've got this here, you've had this nice big uptrend, and then you've watched it come all the way down here over 5 days, and then you've seen it bounce off this low. Now you've drawn this Fibonacci, so I'll draw this for you. So go back. I'm here, I'm looking at this, okay? Now if I go up to the wild Excel, put this on the hourly. So I've seen this big uptrend, and I've seen it break out, break these lows, and now it's found a low here. Now, I don't know yet whether it's going to come down here or what. So what I do is you click the Fibonacci, and if you want to do it in a downtrend, you go from the high to the low. And if it's an uptrend, you go from the low to the high. So you click at the high, drag it down to the low, and release. And there's your lines up. Now, three significant, we could say four, but three main levels you want to be looking for here are these: 61.8, 38.2, and 23.6. You can, the 50s quite relevant as well, but they're the three levels I focus on. They're basically, all they are percentages of retracement. So you've got 0% to 100% here, and these are the percentages in here. Now, the guy who invented this came up with these and found that going from low to highs or highs to lows, the market tends to retrace at these levels. Now, as you can see, we've just drawn, in fact, if we want to go really accurate, get it right on that peak there. I don't tend to focus on large wicks like this, because that's volatility. This is more the current normal running of things. Don't worry too much about big, massive. If that was at the high, don't worry about 2 wicks like that. It's just volatility. So as you can see here, the market's come down and it's bounced right off that 50% line. It's come up, hovered around here for a bit, came down, it's broke through these lines. It's not really bouncing off any there. It's gone back up, and it's sat on that 61.8% line. It's gone all the way down, broke through, come back up, and it's just about missed 38.2. Now, like I said before, in strength and resistance, when we've gone through that, you can draw these lines on the chart, but they're never concrete. You need to think of them as, what can I say, like rubber lines. They've got a bit of bend to them. Now, these percentages do crop up quite regularly in the Forex market and stock market and other things like that. So it's a highly effective tool, but don't take them as concrete lines. Look, sort of think outside the box a bit and see what you can see really, and make it a rough estimation. So here, for example, like I said, these three levels, depends what sort of trend you're going up in, but they tend to bounce off to 61.8, 38.2, and 23.6. And as you can see here, it's risen up and it's bounced up to 38.2, and it's come back down. Now, what I would use this for is Let me get an example for you. This is a good one. Right, you've got Euro GBP 1 hour. I've gone from the low all the way to the high. Now, at the minute, that's the high. If that changes, I'll change this all around. Now, we've got strength from, support and resistance around here. So there, where it's failed to break, it gone up, broke it, bounced off and gone up. Now, as we know, these levels are quite strong in the Forex, as we're looking at Forex. I'd be looking at this, and how I trade off this is, right, this is the low, the main low, previous level of resistance turned into support, so you know that level's quite strong. And right below it, you've got the 23.6% line. So you want to see it break that. And as you can see, it has found it a touch. It's found it there, it's broke, found it there. Sorry, it's 38.2, so it's found that level. It's found it there, and then it's broke up again. So you know this level is as well with its support and resistance. How I trade this is, if I'm expecting this market to go down, I would sit my entry just below that, because if you broke the support and resistance line there, then broke this Fibonacci line, you've got all this play here. And then your stop loss, I mean, this is quite wide, to be fair. I mean, that stop loss, 88 pip stop loss, so that'd be a small lot. But that's how you trade it. You want to see, if you've got a near support and resistance line and a Fibonacci line, you want to see a break of both for your confirmation. Going along here, again, you've got a big wick, well, relatively sized big wick, but that's a nice strong candle. There is a bit of volatility there, but that is the high. So, I mean, that's not too bad. I think that's safe enough to use. So you've gone from you had an uptrend, and now it's failed to break it. It's failed to break that high. So you've gone from low to high. So if you want to draw this in, again, lads, I don't want to. If you want to find out all the maths and what exactly Fibonacci, who he is, I mean, by all means. But I like to try and keep it as simple as I can. It can get quite confusing. I mean, I don't know all the maths myself. I just know that this works, and I know these levels are common. So that's how I use it. I don't really like going too in depth because it just clouds the brain. So yeah, so low to high, obviously uptrend, and now you're waiting for this downtrend, if that's what you think is going to happen. So now you've got the fail of the high there. So now, as you can see here, it's gone up and up and up. And again, these lines are bendy. It's bounced off a bit there. Its price has stalled. It's broke it, but it's closed at that line there. So it failed to break it there, gone up and come back down. I mean, again, this isn't the best example, but this is what you find as you're going through your charts and saying this is live up to date. How I trade this is, I wouldn't personally, if this falls this way now, so if this pair, euro, US dollar, falls down here, I personally would be looking for it to break that line. I'd be looking for it then to break that 50% line. Let's see if you got, so yeah, that is a low. I'd be happy with an entry here. Sorry. I'd be happy with an entry there, but that red line is just below that. Let me give it a bit of breathing space. And I'd be looking to put my stop loss above this 38.2 level, because to have it up here is huge. I mean, I suppose that's not too bad. That's about 50 pips. Yeah, actually, yeah, you could have it there. Not the best setup, not the best example. We'll try and find some others. Right, here you've got this one I've drawn, and this is a pretty good example of Fibonacci levels and how they're ever present. Now, if you want to draw in lines here, go back and look for them in a second. But so you got a nice big uptrend, it drops, and they failed to break the highs, so lower highs and lower lows, and it's gone down. Now, if you look here, it's gone up and up and up. It's gone up fast, 61.8, then it's touched bang off to 50% there, and failed to break it. Now, if you were believing this was going to go up, straight away you've got, so all of this here hasn't happened yet, it's gone down. But if you believe it's going to go up, how you trade this is a great example. You've got resistance there and it's on a 50% line. So if you break that, if you trade that there, I mean, that's great for you, because you know that's bang on resistance, bang on 50%, break that, and as you can see, it went up and up and up, followed up, gapped up and gapped straight on that 38.2% line, went up, found a little bit of resistance here where price stalled 23.6%, and then went up, formed a high, and then started coming down low. Now you see it hovers around this 23.6, goes down, hovers around the 38.2, goes down, breaks the 61.8, keeps hovering around for a bit. As we're going to see here, it bounces off 38.2. Even though it breaks it with this wick, it stalls at the 23.6, and huge volatility here, comes up, bounces off 61.8. Now you can see you've got 6, 7 examples there of how it's finding these levels continuously. Now, some of you have asked how you trade it, so I'll give an example. Say, zoom out a bit, just so it's clear. Say you've had the uptrend, so none of this is there, focusing on this. Okay, so you've watched it, gone up and up and up and up and up. You've seen it here, you've waited for it, formed a new lower high, and it's on its way down. So now, take that. So you've seen it here, lower high, grab your Fibonacci, low to high, because low to high is on the uptrend, high to low is on the downtrend, and you've got your 23.6. Now, how I'd be looking here, if none of this is here, I'd be going back and seeing if there's any resistance at this level, which not really significant. Price is still there. Then, pardon me, then we'll go back and have a look. Look straight away here, on that 23.6 line, you've got resistance. Yeah, it's broken it. The wicks are broken through a couple of times, but price hasn't really gone below it until it's broken through down here. It's come down, it's bounced up, and it's hovered. It's bounced off this 23.6 line, and then off it's gone, down below. So for me, that would be a nice level to set a trade at. You're hovering around here, so you know it's below. To do it, it's got to break that low, which it does. So you'd have it a bit below there, so it broke. You get open by this wick, and it break, and then so on and so forth. I mean, if you left that, just 100 pip move, whatever you wanted, you could set it. You could even set it off a take profit line. So you could have, say, your 50%, your 61.8, and then go back and see if there's any support and resistance. So not really at 50%, 61. In fact, sorry, yes, there is at 50% there. So that would be your first target, and that would be 50 pip move. So it's quite nice. And yeah, so that's how I trade that in that example. Again, it's not perfect, and you very rarely will see it perfect. And that's just, like, you know, by now, lads, that's just how it is. Get rid of that. Chart. Euro GBP. Going on here, you can see it hovers at the zones quite regularly. You see it bounce off there, bounce off there. Now, that would be great seeing, obviously, double bottom, triple bottom, even as you see there, goes up, finds 61.8. Now, if you look, what's significant about this is I've drawn this from this high to this low from back in 14th of July. And now it's found it once, twice, 3 times, 4 times, 5 times, 6, 7, 8, 9, 10, 11 points in about 2 weeks. So you see how vast these levels go on for. You could have had this on, you could have read these charts here by this Fibonacci quite happily. Now it's formed a new high there, but you see how even in, and again it's all support and resistance, but shows you how significant these lines are, these retracements. If you wanted to, I mean, let's just do it like we would do. I don't know if this is going to work, but so you've watched it go down here, bang, 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 new low, formed a new high. So now you're looking for that retracement. Let's see if anything comes up. Well, there you go. So if you were looking at this here, you've seen it form a new high, broke this here, formed a new high, and bang. You'd be waiting for it to bounce off one of those levels, which it has, found it again, bounced off there, found resistance there, up it goes, so on and so on, found it there. I mean, there. So to be looking at that, drawing your support and resistance lines. So there. There. Again, none of this has happened yet. Just quickly highlight it. None of this has happened. It's formed a high, and it's on its way down. Now you're waiting to see where it's going to stall. It's already broke this, so you can discount that. It's broke it and it's risen again, so you'd be looking at that 38.2 line and seeing where it goes. Now, as you go along, you'd see it break that, so you discount that. Get down to about here, it's hovering, and it's come down here, support and resistance. Let's see, go back. Oh, yeah, it's broke it there, found it a bit there, resistance there. So yeah, I'll be happy with that. 61.8, and as you can see, you could just watch it there, breaks off it. That'd be looking to be your entry above the 50%. Happy with that? Again, I know these aren't perfect examples, but I'm just trying to make it as realistic for you as possible. Here's USD CAD from back in July. So up, nice big uptrend, new low, or new lower high, sorry. So you've seen it's break that, it's come down. Now, again, I'll get rid of this. So you've seen it come up and up and up and up. It's failed to break that, failed to form a new high, so it's formed a lower high. And none of this here has happened. So Fibonacci tool, low to high. And now we're looking at seeing if these Fibonacci lines match up with the support and resistance we see in the chart. So yeah, kind of there. It's broke it, but I wouldn't say it's bouncing off it. Previous there, not really. Again, it's hovering around here. Oh, sorry, tell a lie. Missed that completely. It's found resistance there and there twice. So 38.2 is a level where I'd be concentrating on. Get rid of that. So I'd be expecting it to come down to this 38.2, bounce off it, form a high, because it normally when it bounces, it normally bounces off to the next Fibonacci line as a textbook answer and comes back down. So I'd be looking at this 38.2, waiting to see what it does. As it comes down to it, breaks through it, comes up, breaks down, goes down to the 50%, comes up to the 23.6%, which is perfect, which hasn't gone to the plan like we'd think it would do, but it's respecting these levels. So now you'd see that, and then you'd be doing what you do here, 23.6, happy days. You want to see a break of that low. and that would be your entry. That would be your stop. And your next target would be there. Symbols. I'll just make this blank so it's clearer. So, got the high, low to high. We've seen it come down. Seen it come down to. Oh, so again, we'll see it come down to here. So from this level, we're up here now. We've watched it come down. We've drawn this. We've seen it bounce off the 50%. It's gone up to 23.6% and hovered around there. So now that's our low. That's our entry. That's our stop. And then using the Fibonacci, how I would use it. I mean, it's found it before. 50%, that would be my first target. How many pips is that? 64 pips, 62. And your only stop loss of 39, 40 pips. That's a nice little trade. I mean, you could carry it on further. You can see here where this is a great example of how these lines are respected, because 23.6 down to the 61.8, which was 50% was previously support, down to 61.8, up to the 50%, now resistance, and all the way it goes down. So that is how I'd use it on a trade. I'd see the uptrend, just to recap, see the uptrend, see the pullback. I mean, you could even trade that, like we know how with breaking the new lows. If you got to do it around here, perfect. Drew your Fibonacci, see the pullback down, the new low, lower high, bang. And using these Fibonacci levels as your take profits and potential stop losses. Ideally, you want to go above structure highs on this, but for take profit, it's a great little indicator for that. And that's about it, lads. I don't want to get too technical and complicated on it. Just go with, if it's an uptrend and you're expecting it to fall, your low to highs, and if it's a downtrend, I mean, we could even do it quickly now. Coming along here, seeing it, in fact, we'll get the RSI up. How is it? Right. So you've gone into the oversold here, overbought, sorry, zone. All the way down, you're hovering in the 27 zone of the RSI, so you're oversold. So nice little entry for us here. I've lost it again. We'll just do it like you would do in real life. High to the lows, it's a downtrend. Now, you've seen here, another example, double bottom, great. RSI, divergence, fantastic. And what happens? It buys off. But this hasn't happened yet. We're not seeing any of this. So you've got your double bottom, that's formed, and we're here. Price has gone up. It's hit this 23.6, respected that nicely. Pardon me. It's gone up, come back down, and now it's turned resistance into support. Bingo. That, again, it finds it, comes up again and breaks some of the lines. See how price rests, doesn't stop, but rests on that 38.2. And comes down, finds support, so that's another double bottom. So your entry would be, you'd want to see a break of that high, Fibonacci level there though, bit dangerous. When your resistance, again, when your support and resistance is close to your Fibonacci level, you want to see clearance of both. So ideally you want to be above here. And then you just be sitting on this for a while, really. Not the best trade, but it does eventually come into profit. But that's just a good example of showing how, zoom out, showing how these levels are respected. Yeah, so bounce off 23.6. This is what you're looking for. All these level finds it there. Resistance into support, and so on and so forth. You can see, I mean, this is again drawn from 11th of July, and 2 weeks later, these levels, same levels, are still being respected. There, so on and so forth. So that's basically it, lads. So you want to be using your Fibonacci. Once a trend has played out, you've got a new, a lower high, or bloody hell. You got an uptrend, it's failed to form a new high, so you got a lower high. Then you draw your Fibonacci in from the bottom to the high of the uptrend to see where your retracement is going to be, and vice versa on the downtrend. So downtrend's completed, you're expecting it to, the buyers come in and start taking control, as you have here. Bang, double bottom, that's in. You're expecting it to come up to one of these levels, 23.6, 38.2, 50, or 61.8. Once it finds one of them levels, then you can trade off it and set your take profits off it. So it's come up, it's come down. That would be my stop. And you'd want to see a move above the 50% line, because that's where it's come near from there, because obviously this hasn't happened yet. So that gives you a stop loss of 84 pips ish. Entry there, and if you did enter there, would have come that down again, respected that Fibonacci, and you would have, I mean, depends how far you want to go. Could use 100% line that high there, 128 pips. So not bad trading, but that is it, lads. Again, I don't want to go too deep. Just practice drawing these lines on a chart. Make sure the trend is finished before you do draw them on. So obviously you want to see like that uptrend, lower high, and off it goes. So that is again, just show this stuff does work. Finds it there, resistance, bit of support-ish there, resistance there, and yeah, that's it, lads. So keep practicing with it before you actually start using it trading, and work out where you would trade off it. And I hope this video has been helpful. Cheers.